Hello. Good morning, team. Good morning, crew. Welcome to another Wealth Coffee Chat. Good to see a few of you up early and at it already. Alison, Aaron, good to see you. Let us know in the chat, team, what you're up to, where you're coming in from. Welcome to the second Wealth Coffee Chat of 2023. If you don't already know, I'll do the intros. Jason Witten's my name. Most of you know that. Some of you do. Some of you might not. If you're new, if you joined our mentoring and coaching program just recently, you found us through the socials, welcome along. Each morning, usually Monday to Friday, I get to hang out with you, wonderful, amazing people, and talk a little bit about property investing. Tim, all the way from Rocky. Thanks for joining us this morning, mate. I've been investing well over actually 25 plus years as a property investor myself. Done a few deals, helping many investors around Australia and New Zealand also do a few property deals, and along the way learnt one or two things, and each morning get to share a few of those things with you guys, ladies and gents, to see how we can go the distance with this thing called property investing. A few sayings around here if you don't already know. This thing's a marathon, not a sprint. It takes time to build a property portfolio, and that's a bit about what we might talk about today. And the idea that we need to buy good quality properties, buy well, don't sell them, is really important too. So welcome along. Thanks for joining. Good to see you. Jeff, how are you? Mate, yeah, it was awesome to have you there, mate, along with Alison and Michelle and a few of the crew for a little bit of a celebration. So today I was thinking, what can we kick off the year with? Yesterday was a bit of an overview. There's lots going on. We've got plenty to sink our teeth into this year. Yeah, there's a few classics, aren't there, Alison? The idea of becoming wealthy, many of us, certainly me in the early days, I was quite confused with what it was going to take to become wealthy, certainly with real estate and real estate investing. You and I both know, and if you don't already, investing is about buy and hold, not trading. Like buying and selling is a business. So that's not my cup of tea. Buying and selling is not something that we encourage investors to do early in their investing portfolio, maybe later once they've got some acceleration strategies in place. But what does it take? What does it take? What are the things that it takes to become wealthy as a property investor? And there's three things that I'm going to talk about today, big ideas that we need to understand and know. And I thought we'd sort of maybe kick that off for the first couple of conversations and Wealth Coffee Chats this year, so we can, lay the foundations of what that might be. So what do you think it's going to take? Thoughts, ideas. So, many of us, including me, in the early days, thought success, certainly with property investing. Hey, good morning, Sonia. Good to see you. Certainly with property investing, it was like a straight shot, right? You kick off, you look where you're going, and you go for it, right? I don't know about you. Let me know in the chat. Yep. Tim's already on it. Some persistence, some knowledge, and some patience for sure. What do you think it's going to look like? Yeah, I'll start investing, and then you beauty, it'll be a straight shot to success, whatever that is. Whatever your version of success is over here. Is it dollars? Is it time? Is it freedom? Is it choice? Whatever they are. You beauty along the way, tick, tick, tick. Now, I don't know about you, my story of investing had a few of these curly ones over here, more like a bit of a journey. Great feedback actually. Yeah, Sonia, learn your craft, get the knowledge down pat. It took time. So the first couple of property deals that I did, they went well, and then they didn't. Okay, and then I was out. Hey, morning, Stephen. a couple of years in, I thought I was doing well. Couple of years later, I wasn't doing well. First little bump in the road, second go at it was a bigger bump. Third go at it, I think by now I've got a bit of an understanding personally how I invest and what I do. So certainly, that idea leaves clues, right? Because success is certainly a journey in whatever you get up to, no matter where you are, no matter what you're up to. But property is certainly one of those things that many people have opinions on. Opinions at barbecues, opinions about things most people aren't even qualified or experienced to have. So, sometimes we can get a bit delayed along the way. But, what's the point of this conversation? The real conversation is, what are those three things? And a few of you guys and girls have already said a few of the common theme here. But over time, and this is showing a little bit of an earnings idea, but really, for me, this chart really shows that investments will and can and often will outgrow your ability to earn, all right? So how do we get that there? What do we do for us long-term, or maybe even short-term, medium-term, over our stages of investing, right? So a little bit of a refresher. Some of you already know this model, but we talk about a model of these three stages of investing. For all property investors I've seen, they go through the acquisition phase. They end up, making sure they can organize their resources and their focus in a way to acquire the assets that they believe will get them to this point. All right. So tell me in the chat, for many of you, I don't think there's any spring chickens out there. We've all got different. What's a polite way of saying this? We're all got some experience under the belt, right? Tell me, average. What do you guys think in the chat? Tell me. What would it take? How many years would it take? Yeah, totally, Alison. How many years would it take you, on average, to get the acquisition done? Maybe your goal is 5 to 7 properties. Let's just say that. 5 to 7 properties. Your experience and or your observation. I've done a few laps. The block. That is true, Stephen. How many years? 5 to 7 years. That's right. Especially if you've got the resources to do it. And sometimes, if you've got the income and the deposits to do it, often it'll take 5 to 7 years to get that under your belt. It can certainly, extend into 7 to 10 years often for the acquisition stage. So right now, a number of Sonia and Tim talked about this one, staying the course, bit of patience. The number one lesson, the number one takeaway here, and this is not a surprise to anyone, for becoming wealthy, is understanding the time it will take as a property investor to create your wealth. Understand the time, the practical time, right? Now, I'm not talking about a business. I'm not talking about being a developer. I'm not talking about renovating and selling. I'm talking about buy good quality properties, own. What's the time frame? Practically, put it in the chat for me. Significant wealth and good passive income from a property portfolio. Put it in the chat. What time frame? What's a realistic time frame? And I don't. What's a practical time frame? What's a practical time frame for those properties that you purchased that are fantastic and great and you're happy to own for a long time, doing what you're doing? Yeah, Stephen's on it. It's 20 plus years, folks. All right. So most people, especially, and I did too. I don't know about you, but when we're younger, we can't even comprehend 20 years. You're like, what? 20 years? You're kidding me? Like, I got to do this for 20 years? Yes, you do. Yes. If you're sitting there right now and you're surprised about 20 years, which most of you I don't think would be, right? Yep, certainly 15 to 20 years to get it mojo on, and from 20 years onwards, you're going to be styling. Is that good English? You're going to be very happy. But time's the number one thing. Even excuse me, knowledge or quality or anything like this, number one thing is time. Most property investors give up. They shit the bed. They chuck their toys. They're good time Charlies. Oh, I'm only here when the property prices are going up. You know, the last few years, you know, those who realised that there were some positives, you know, in the marketplace jumped in. Didn't really have a long-term vision. You know, they bought a property. Maybe they purchased at the top of the market. And now they're having a whinge that the interest rates are going up. And over 20 years, you're going to experience interest rates going up, interest rates going down. Average property prices going up, average property prices going down. All of that's normal, right? But you got to stay the course, which I like Sonia saying that. You know, Tim, persistence and patience, 20 years plus, folks. So number one takeaway, you got to know this. It's going to take some time. It's going to take some time, right? And you got to stay on track, okay? As we go into the next stage, many of you have seen this consolidation stage. You've got some assets. You know, those assets are growing in value. You know, your wealth is increasing. Your rent, which equals passive income, is increasing. And at this point, this kind of like in this sort of, you know, 15 to sort of 20-year section, right? This is where, for many of us, we start the idea where we could aggressively, if we choose, to debt reduce, okay? Now, there's a gap here. We call it the wealth gap, where your debts become lower, your values become higher, and we want to unlock this wealth in a certain way, because what happens at this section, and I'm sort of getting off track from our conversation today, but what happens at that section, often your value of your real estate or portfolio is significantly more than the debt you owe on it, but it's not efficiently unlocked and at use. And you guys know I talk about things called acceleration strategies at this point, so I'm not going to get delayed today. But we want to talk about that stuff. So number one thing is absolutely 100% time. That's the number one thing. What's the second one? For me, absolutely 100% the most important one. Second one is the right team. The right team. You got to have the right people, right? So to keep you on track. Now, and third, I'm going to chuck the third one in there. Your own amount of knowledge. Okay? Knowledge. So the right team and the right knowledge. Right? So those three things. And time can trump all the others. The right team helping you stay on track. You get an accountant. Oh, I don't believe in property. 3 years in, they talk to you about, oh, you shouldn't do that because it's high risk. Well, it's more risky, not owning any assets, not putting $100 a week into your portfolio and never having wealth and ending up on the bloody pension. That's what's more risky. It's bullshit, Don't talk to people about your wealth who aren't wealthy themselves, right? Who haven't invested in that way, all right? Anyway, another little side rant. I'll do that at some point. The right team. In real estate, there are a minimum of 6 really important people to have on your team at any one time. A coach. We call it the 6-star team here at Positive. A coach who's a finance expert, a property expert, so an agent who represents you, a property manager, property management, an accountant, and a fin planner, right? And they all need to be on the same page, right? The 6-star team, boom. You've got to have them. Now, you're not going to do this by yourself. It's impossible. There's way too many things to know, understand, and learn. And third, but not least, but certainly you need to have good education, which is ongoing, so you feel comfortable. You know, you should never hand over your wealth entirely. There's this conversation in this space, right, where where you've got to have an understanding of what your team is doing for you and why, right? So this is kind of like the difference between delegation. I'm delegating someone to do something because they're tactically proficient at this, like somebody do my taxes. You're not going to do them yourself. Or what's called abdicate. I think it is there's a B there. Abdicate. Anyway. Jeez. Made a mess of that one. Abdicate. Anyway, there you go. Ab and then gate. Anyway, you got it. So abdicate is like, oh, I don't know anything. Someone else do it for me. And then you take no responsibility for the outcome, right? So these are the big three. You got to understand it's going to take time. 20 years plus. Don't be a good time, Charlie. Don't be a turkey. Tin pot turkey, as Allison says. It's going to take time. Build your portfolio. Hang out with the right people who have your success as their success. Okay, everyone's got an agenda, including me. If my agenda is I succeed when you succeed, that's the type of relationship you want when it comes to the world of your wealth. And make sure you understand what's going on. Educate yourself. You don't have to know everything, but you have to know the overall concept so you can stay on track with your wealth, folks. All right? There you go. I think that's about it for today, for me. But last but not least, I want to show you something just quickly. Many of you guys have seen this in our little thing. This is our little passive income and wealth planner. Let me see. I think. Oh, it's just off to the side. Let me see if I can shift it over a bit here. There we go. All right. Many of you guys have seen this when it comes to the idea of what happens when we, create our wealth. Let's just quickly look at this. I'm just going to use this as an example. All right. Let's say we buy our own property, our Prince Place of residence, and 5 investment properties. That takes us 10 years, right? So we're 10 years in. We're 10 years into goal, right? And we're like, okay, my goal is to have a passive income of $100,000. 10 years in, up. Hang on. I've got to change this because. All right, there we go. So my goal on the way in, and this is not including any tax deductions back, so it would be positive after tax. But, looks like I have to keep paying to own this real estate. And yes, sometimes when the interest rates are higher, you have to put more in. Sometimes when they're lower, you don't have to. Sometimes when the rents are higher, etc. Right? So then, 10 years in, it's a struggle, I'm going to give up. No. All right, well, let's go wait. What happens when we add some time? 15 years in. Right, now my passive income is positive, $34,000, right? Okay, now let's go 20 years in, right? And what's going on. Yes, 20 years in, I'm at $100,000. 10 years ago, you were like, oh, woe is me, 10 years in. Well, let's do 30 years in. Let's just do that. Let's see that all of the properties have paid themselves off. And look at the passive income. It's not linear, team. $439,000 passive income, okay? The point of that, team, the point of that is it's not linear. Each decade and the wealth is not linear. Let's go back to that slide just quickly as I wind this one up. It's not linear. It doesn't go just up incrementally. It's not like this every 10 years. It's like this. Okay? It's the hockey stick. The second and the third 10 years just goes crazy. And then it just expands. You put that 40 years out, then wow. And this is the other thing. I think one of the other little nuggets here for me that I've certainly learned as I've got older, and I've met wealthy people who are now second and third generation into creating wealth, wonderful, amazing people. We think short term. I challenge you to think about your legacy. That might be your children. That might be business. It might be some other things. Imagine you teach your children. Let's just use that because that's my example of the world right now. It could be different for you. I teach my children how to do this at the next generation. So my wealth then gets compounded for their wealth, then gets compounded for some other wealth. What could you do? How could you impact and change the world and make the world a better place? Powered by purpose, this stuff. Anyway, there you go. That's it from me, folks. Done. Wealth Coffee Chat over and out. Join me tomorrow for another one. Hopefully that was useful today. I thought we'd sort of set a little bit of the tone. Thanks for joining us. Great to see a bunch of you online. Join me tomorrow for another one. And as always, leave me a few comments in the chat if there's anything on your mind you want me to discuss. Always happy to do so. And, we should make sure we do some good things this year. All right, team, that's it. Wealth Coffee Chat over and out. You guys have a good rest of your day and see you tomorrow around about the same time, about 8:10. All right, folks. Bye-bye. See you then.